Welcome back to this week's edition of the RiskSpotlight Operational Risk News Update. My name is Emily Jones, and today I'll be bringing you essential updates and insights from the world of operational risk, drawn from the past week. All information shared here is sourced from the RiskSpotlight portal, the premier forward-looking service dedicated to operational risk content. Let's get started. The first update is about the European Union's adoption of the Cyber Resilience Act, CRA, to strengthen cybersecurity for digital products. With cyber attacks costing $5.5 trillion globally in 2021, the CRA aims to ensure connected products, such as smart devices, are secure against cyber threats. Medical and aviation products are excluded, as they fall under existing EU regulations. By 2027, manufacturers must have compliant products on the EU market. The CRA addresses inadequate cybersecurity in products and the challenge for consumers in identifying secure items. It introduces mandatory requirements to protect users, enhance transparency, and ensure lifecycle security. This regulation will affect businesses in the EU and the UK, where similar legislation took effect in April 2024. Compliance will help providers avoid legal issues, maintain trust, and ensure products remain secure against future threats. The next update is about a recent breakthrough in quantum computing, raising concerns about encryption security. Reports claim Chinese researchers from Shanghai University used a D-Wave quantum computer to crack substitution permutation network algorithms, including present and gift 64, related to AES encryption. AES 256, used by banks and governments, is still secure as the attack was on a 22-bit key, much shorter than the typical 2048 or 4096-bit keys. While this research highlights the future threat quantum computing could pose to encryption, it doesn't pose an immediate risk to current standards. The researchers noted that hardware limitations and environmental issues mean a genuine quantum threat remains distant. Caution is warranted, but panic is premature. The next update is on the rising severity of ransomware attacks, and it's not good news. According to a new report by cyber insurance provider Coalition, the severity of ransomware attacks has spiked by 68% in the first half of 2024 compared to the previous 6 months. The average ransom demand now stands at $1.3 million, with some variants asking for up to $4.3 million for a decryptor. The average loss after negotiations amounts to $353,000, which is 12% lower than the same period last year. Interestingly, Coalition successfully negotiated the ransom amount down by an average of 57% of the initial demand in cases where a payment was made. The report also notes that the frequency of ransomware attacks decreased by 10% in the first half of 2024, but Canada saw a 34% increase. The US, on the other hand, experienced relatively stable ransomware frequency. The report warns that exposed login panels more than triple the likelihood of experiencing a claim, and businesses with at least one contingency, such as risky technologies, were 2.5 times more likely to experience a claim. These findings come from Coalition's 2024 Cyber Claims Report, mid-year update. The next update is about the rising trend of large cyber claims exceeding €1 million. According to Allianz Commercial, there has been a 14% increase in the frequency of these claims in early 2024, with severity up by 17%. Data breaches make up 2/3 of these losses, following a significant rise in 2023, with over 700 claims reported. The increase is driven by rising ransomware attacks and stricter regulations. In the US, privacy-related lawsuits surged to over 1,300 cases in 2023, more than double that of 2022. In Europe, greater awareness of data protection could also lead to more claims. Experts stress that AI and strong cyber hygiene are crucial for mitigating risks and reducing costs, highlighting the importance of investment in cybersecurity and data governance. The next update is about the rapidly evolving cyber threat landscape due to emerging technologies like AI, quantum computing, and IoT. The World Economic Forum highlights that these technologies introduce new vulnerabilities that traditional cybersecurity cannot address. Over 200 emerging technologies, including blockchain and cryptocurrency, add to this complexity. The forum's report, Navigating Cyber Resilience in the Age of Emerging Technologies, calls for a shift to resilience by design in systems. With 32 billion connected devices projected by 2030, robust security and monitoring are critical, alongside addressing the shortage of skilled cybersecurity professionals. The next update is on global natural catastrophe trends, showing a mixed outlook. Gallagher Re's Q3 2024 report noted economic costs from natural perils totaled at least $280 billion, slightly below the 10-year average of $309 billion. Insured losses, however, hit $108 billion due to frequent low to mid-size events, especially in regions with high insurance coverage like the U.S. The U.S. accounted for over 71% of insured losses, surpassing its average. Weather-related disasters dominated, with Hurricane Helene as the costliest at $10 to $15 billion. Other stats include $51 billion economic loss events and the warmest Q1-Q3 since 1850. The next update is about a new study highlighting a worrying lack of awareness among UK businesses and HR professionals regarding the upcoming Worker Protection Act, which focuses on sexual harassment in the workplace. Culture Shift's study revealed that 45% of UK businesses were unaware of the law's implementation next month, despite 66% stating that preventing harassment is a key objective. The study also found 39% believed more emphasis should be placed on workplace harassment, while 1 in 3 said organizations lack formal policies. Only 39% felt their business was very prepared to handle harassment allegations. The next update is on the UK's efforts to combat authorized push payment fraud. HM Treasury has published a final draft of the Payment Services Amendment Regulations 2024, which aims to enhance these efforts. The new regulations allow payment service providers to delay the execution of certain payment orders if they suspect fraud or dishonesty, giving them more time to verify the transaction. This delay can last up to a specified time limit, and if the provider decides to delay, they'll be liable for any charges or interest incurred by the payer due to the delay. This legislation is set to be presented to Parliament shortly after the government returns from conference recess, and it's specifically designed to tackle authorized push payment fraud in the UK. Now let me provide a quick update on key operational risk loss events that were reported in the media last week. The first update is about the U.S. Department of Justice filing an antitrust lawsuit against Visa for allegedly monopolizing debit network markets. The DOJ accuses Visa, which processes over 60% of U.S. debit transactions and earns over $7 billion in fees annually, of stifling competition and maintaining inflated fees. Filed in the Southern District of New York, the lawsuit alleges Visa imposed penalties on customers using other networks and incentivized potential competitors to partner with them instead of competing. Visa's shares dropped by more than 5%, indicating the potential impact on the company and consumer prices in the U.S. economy. The next update is about Westpac, one of Australia's major banks, facing a series of significant online and mobile banking outages this week. Customers have been left frustrated and demanding answers as they've experienced difficulties accessing their accounts and making transactions for 4 consecutive days. The disruptions have affected millions of users. Experts are concerned about the possibility of a cyber attack, specifically a denial of service attack, and the issue has been referred to the Australian government's lead cybersecurity agency, highlighting the severity of the situation. The last update is about a recent data breach at Wellfleet Group LLC. On October 14, 2024, the company filed a notice with the Attorney General of Texas, revealing that unauthorized access to sensitive information had occurred. The compromised data includes names, addresses, medical information, health insurance details, and dates of birth of affected individuals. And there you have it, a whirlwind tour of last week's operational risk landscape. If you want to read more about the topics I have covered and review additional content on emerging operational risk topics, then please log in to the RiskSpotlight portal if you are a subscriber, or go to riskspotlight.com to sign up for a free trial. Thanks for tuning in, and until next time, stay safe and keep those risks in check.